Opendoor just wrapped up another eventful trading week, and once again the story isn't just about the stock chart, it's about the narrative that continues to evolve around this company. After Thursday's rocket-like rally of nearly 80%, Friday's session brought a more measured tone with profit-taking and consolidation, and now we've seen aftermarket strength suggest that the $9 range is becoming a real floor. But while traders are watching price action, the real story has been unfolding in the background with leadership changes, cultural resets, and a media blitz unlike anything we've seen in this stock before. Keith Rabois, who rejoined the board last week and is now serving as chairman, made headlines in a CNBC interview that has been circulating widely across financial media and social platforms. His message was blunt: Opendoor is bloated. He said the company has roughly 1,400 employees, but in his view, it only needs about 200. He went even further by pointing to cultural issues inside the company, saying remote work and certain structures had damaged focus and execution. To some, these kinds of comments might sound harsh. But for investors who have been waiting for accountability, cost discipline, and a path to profitability, this is exactly the kind of leadership we've been hoping for. Rabois isn't coming in to play nice or maintain the status quo. He's coming in to fix what's broken. And this is why his presence, alongside Eric Wu's return to the board and Kaz Nejatian's appointment as CEO, is so transformative. It's not just about AI and innovation, as important as those are. It's also about the basics, running a leaner, tougher, more efficient company that can scale properly and achieve profitability. In many ways, this is the missing piece. For months, the bear case on Opendoor has been focused on bloated costs, shaky execution, and weak guidance. Now, you've got a board chairman who is openly saying the company needs to be cut down and rebuilt with merit, efficiency, and excellence at the center. That's a sign to the market that change isn't just coming, it's already here. And while Rabois has been laying out the vision for internal discipline, Eric Jackson has continued to be the face of the external movement. He's still in New York, extending his incredible streak of daily video updates, and is continuing to push the open army narrative into the mainstream. His stunt outside Drake's residence has become legendary in its own right, but he hasn't let up. In his latest updates, he's hinted that members of Drake's team have actually been engaging with his content, which means the cultural traction of this campaign is reaching new levels. Jackson also floated something that has gotten a lot of chatter on X. He suggested that maybe it's time for Chamath Palihapitiya to get involved with Opendoor again. Chamath, of course, was instrumental in bringing Opendoor public through a SPAC a few years back, and while his role faded, the idea of him re-engaging now that Kaz and Keith are back is fascinating. It would tie together the original SPAC sponsor with the returning founders and a fresh AI-focused CEO. Is that a done deal? No, not yet. But Jackson's willingness to throw that idea into the public square shows the way he's trying to build momentum and draw more heavyweight investors back into the fold. And if that wasn't enough, Jackson is also attending a high-profile meeting where Donald Trump Jr. and Barron Trump are expected to be present. He has openly said that he hopes to get a meeting with one of them to talk about Opendoor. Now, again, this is speculative, it hasn't been confirmed, and there's no guarantee it will happen. But the very fact that Jackson is positioning himself in these circles shows the scale of his ambition to put Opendoor in front of as many powerful and influential people as possible. He's not just talking to retail investors on X anymore. He's trying to connect Opendoor with cultural icons, political figures, and institutional backers. This is how movements expand. Meanwhile, back on the stock side, we've seen consolidation after the huge Thursday rally. Friday's sell-off, closing down about 13.8% at $9.07, was nothing surprising. After such a parabolic move, profit-taking was inevitable. The key point is that the stock held above $9 and even gained slightly in the aftermarket, which suggests this is becoming a new floor. For months, Opendoor was stuck bouncing around the $5 to $6 range. Now, with leadership changes and fresh momentum, it's been reset into a higher band. That's exactly how bases are built. And the shorts are still in trouble. With roughly 24% of the float short, that's about 155 million shares betting against Opendoor. Thursday's move already put them on notice. Friday's pullback may have given them temporary relief, but as long as the stock holds this higher range and leadership continues to deliver bold changes, the pressure will only build. Covering doesn't happen all at once, but when it does begin, it can accelerate moves higher. And while no one should invest purely on the hope of a squeeze, it's clear that this short positioning remains a potential accelerant. Looking ahead, the biggest near-term catalyst is the Federal Reserve's rate decision next week. Markets are increasingly expecting a cut, and that would be an enormous tailwind for real estate. Lower mortgage rates could reignite demand and bring liquidity back to the housing market. For Opendoor, which thrives on volume and velocity, that could be a game changer. Layer that on top of the leadership reset, the cultural energy, and the growing narrative that Opendoor is transforming from a housing stock into a tech-driven growth platform, and you have the ingredients for something much bigger than just a short-term rally. The narrative is what's so important here. Stocks trade on fundamentals, yes, but they also trade on stories. For a long time, the story around Opendoor was negative. It was about losses, dilution, and uncertainty. Now, the story is being rewritten in real time. It's about founder DNA returning. It's about a Shopify veteran with an AI mindset taking the reins as CEO. It's about discipline and efficiency being restored under Rabois. It's about retail conviction spreading into mainstream media with Jackson's media blitz. It's about cultural traction with names like Drake and maybe even political attention through Trump connections. This is how a cult stock transforms into a generational play. So as we head into the new week, I remain incredibly bullish. Not because I expect the stock to double again overnight, but because the foundation is stronger than it's ever been. $9 looks like a new floor. Leadership has never been more aligned. The open army has never been more energized. Shorts are still trapped. And catalysts like rate cuts and cultural engagement are waiting just ahead. When people look back on this moment in Opendoor's history, I think they'll see it as the turning point. The week the founders came back. The week Kaz was appointed. The week Keith Rabois declared the culture broken and promised to fix it. The week Eric Jackson took the story from retail forums to mainstream media and even hinted at pulling Chamath back into the mix. The week the stock finally broke free from the $5 doldrums and reset itself into a higher range. This is the kind of week that marks the beginning of a new era. And that era officially starts Monday when Kaz Nejatian walks in as CEO. That's when this isn't just talk. That's when execution begins. And that's why, despite the profit-taking and the noise, I'm more bullish than ever on where this company is heading.